Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter like we normally do. I'm going to see what's being shared on social media. I'll share my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what's going on. If you want to follow me at _finance, and if you want to join our community, finding-value.com, where I dive deeper into all of these topics and subjects, looking for potential investment opportunities, sharing those opportunities with everyone in the community. We do have a special going on. Special is the coupon code if you'd like to join. 50% off the first month only on a monthly membership, and a larger discount on the yearly membership. So going first with Lobo. Powell just said the U.S. may see higher inflation and weaker economic growth, stagflation, this year. He also said the Fed's two mandates may come into tension. And what are the two Fed mandates? Inflation and employment. They're going to come into tension. Don't know if Mr. Market will pick up on this, but both of these seem like major admissions to me. So we could get an economic slowdown, aka unemployment going up, at the same time that we have high inflation. That is stagflation. And the one sector that does very well in a stagflationary environment is precious metals. Gold is number one. That's that safe haven asset. It loves stagflation. Energy does well in stagflation as well. That has been a proven winner going back in history under stagflationary conditions. Coming down, this is insane lie even for him. He says the United States is taking in record numbers in tariffs, with the cost of almost all products going down, including gasoline, groceries, and just about everything else. Likewise, inflation is down, promises made, promises kept. I think that's a little bit early to be boasting here. But I do think that they're artificially holding down oil. They're coming out and just bragging about this stuff right here. They're like, gasoline's down. Well, oil's down. Gasoline is down. Well, I wonder if they're in there doing something with the pricing of gasoline and oil. What I see is a big squeeze in gasoline, where we're squeezing into a corner of a falling wedge that's ready to break out. So we'll see where this goes. That's where my head's at. And inflation is a measurement of the rate of growth of money supply. So inflation being down doesn't mean prices go down. It just means that the prices don't go up as much or as fast. That's what inflation is down. I don't know. Everything I buy at the store, it's way up. And I don't know if inflation has slowed down here recently. I mean, I think it has, but it doesn't really matter because the overall price level is so ridiculous compared to what it was in 2019 or 2020. I would say most everything that I buy is way up. I like buying, eggs, steak, vegetables, everything. Everything is massively higher. You know what's gone up a ton? Pistachios. I eat pistachios, I get the big bags or whatever. Those are way up. I mean, I can remember when those were single digit for, I think, what is that, like a 3-pound bag of pistachios at like Sam's Club or something. I can remember when those things were under $10. Now they're $15. They're like $14.99 or something like that. That's ridiculous. I don't know. HFI research says U.S. crude oil production over 12 weeks. This is not the trend you want to see if you're calling for more growth. So this is real-time U.S. crude oil production tracking 12-week average. And this doesn't look all that strong. We're not flying higher. Some people will say, demand's not flying higher. Well, come on, guys. I'm going to show you a couple other charts later in this to show you how ridiculous the pricing of oil is. I think oil is completely and utterly mispriced in this market. I think it is way underpriced. We should probably be at least $110, $150 a barrel. And I'll show you why. That's not an opinion where it's an opinion based off of data, and I'll show you the data that I'm looking at. But right now, we're seeing all these things start to turn over. We're at very low inventory levels across the board, and I'll show you what they look like coming up here very soon. Lance Lambert says that has been the case for U.S. existing home sales since the second half of 2022. Historically speaking, turnover in the existing home market is very low right now. He's responding to Wells Fargo says home sales aren't far off from levels seen in the wake of the Great Recession. Well, those are sales, that's volume. But you can see the thing I like about this chart here, this is January all the way to December, and you can see the seasonality in this chart. It's home sales from March through October are definitely where the hot spot is for seasonality in the real estate cycle, or real estate seasonality, I should say. The cycle goes this way across years. So this was an expansion phase from 2000 to 2007. And then you can see 2008 that home sales really dropped off. This was a slowdown, 09, 2010, 2011. You can see the slowdown in home sales. We did something very similar here. We had a move higher in home sales from 2012 moving up into 2022. And we've had a real big slowdown for 23 and 24 in home sales. Does that mean that we're in a recession? Does it mean that the expansionary phase is over? No, it doesn't. And it does not mean that home sales will result in a reduction in home prices either. So, but I thought this was a cool chart to show seasonality throughout the year. Breaking, Senator Josh Hawley has said he will be reintroducing a bill to ban stock trading by members of Congress. I think we should do that. I really think we should. They cannot be trading stock at the same time that they're doing bills and doing things that would impact the price of a stock. So I agree with that. HFI Research says product storage is now below 2024. So we're below 2024. And this is gasoline, distillate, and jet fuel. Well, then how the heck is the price so much lower than what it was in 2024? I don't know. We are lower in these three added together. There goes the euro again. I can't stress this enough. The US dollar is at a critical turning point in his view. We're on the verge of entering negative territory in the 10-year rolling performance of the DXY index. We very well could head lower here. That is a beginning stage of what happens in a commodity bull market. Commodity bull markets occurred when the DXY or dollar falls in these areas here. So we could be at the beginning stage of the DXY rolling over and starting a commodity bull market. Remember, gold leads these commodity bull markets, and gold has been ripping. It's been ripping. $100 up days. It's been ripping. Here's Jorge. I think that's how you pronounce it. This is commercial flights. You can see we are way up on commercial flights compared to 24 and even 2019. The 7-week average, so 2024 is plus 8%. And then 2019, we're 23% over that. In quarter 2, 2025, we are 7% over and 22% over 2019. Big moves for commercial flights around the world in the demand. I love this chart here, guys. I love this chart. I love it. So this is total U.S. oil inventories. They've declined since the beginning of the year. We're at the level of the last 2 years, and we are at, it says 1.6 million barrels, minus 2 million barrels week over week. They're almost at the lowest level that they have been in for the last 20 years. Say that again. They've been at the lowest level our inventory levels are at the lowest level that they've been in the last 20 years. Now, here are some stark observations that I want everyone to see here. In the last bull market from 2000 to 2008, look at the inventory level. That was going up. We were going up, 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 and on top of it, we had a lot less demand for oil in 2007 and 8 versus what we have today. So we were in an uptrend in U.S. Oil inventories all the way to a peak of 2017 and a double bottom in 2021. Then we started pulling on back in drawing down inventory levels all the way back down to 2002 is roughly where we're at today. Maybe 2005 or 6. There's a big difference here. We were building inventory back then. We are now eating through inventory right now. What does that mean? Well, in terms of days of coverage, we are far less inventory today than what we had in 2003, 4, 5. Now think about that. That was a oil boom back then. Why are we not in an oil boom today? I think it's going to change, and I think we're going to go into the biggest oil bull market that we've ever seen in history. 1970 was a big oil bull market. We hit conventional peak oil in just America, but we grew into the world's production capacity. In the mid-2000s, that's when conventional oil peaked, and we were so lucky to go into unconventional oil and produce from unconventional. Now, I think that we are very close to a world peak of everything. Conventional, unconventional, everything added together. So that's why I think over the next, I'll say 0 to 3 years. 0 to 3 years, everyone's going to finally realize it. And they're going to say, holy crap, we've got a problem. I also think we're going to have problems in other resources. Copper looks pretty prime for a problem. And I don't know how to invest in copper that well just because you're gonna be hitting decline rates all over the place. But in oil, I think there's still some very few places in the world that can still grow production while the rest of the world declines. We've seen massive declines in Mexico. Pemex, the Cantarell field's been pretty bad. All of the big Guar and what's the other field in Kuwait? I think it starts with a B. Can't remember the name of it anymore. But all these fields they're getting old, guys. They're getting old, and then our inventory is going to drop like this. Prices will start to go up, and then people think that prices are going to bring on a bunch more oil, and that will be the test. That is what I want to see. I want to see $100+ oil, and I want to see if production actually goes up. If it doesn't go up, we've got a problem. We've got a big problem. Coming down, so we've got NVIDIA. NVIDIA to transition from the most hyped to the most hated stock in the world. During the dot-com bubble, Cisco was the most valuable firm in the world. The stock fell 80% after the bubble popped. Is this NVIDIA's Cisco moment? Sure looks like it. It's got the fractal, and it sure looks like we want to come all the way back down to these levels, or maybe it's more fairly priced. I don't know I can't remember if Cisco was doing things like booking future profits. Some companies back then, they were just a complete bubble. I don't know if if NVIDIA is a complete bubble, but some of the companies back then, Enron and all these other companies, they were booking ideas. That is a huge bubble. So I don't think NVIDIA is as bad as some of the 2000 companies, but I do think it is overpriced. This is EIA. So crude, we had a really big build here of 500,000 barrels. Cushing was down 650,000 barrels. Gasoline was down 2 million barrels, and distillates was down about 2 million barrels. This is, for the most part, about a 4 million barrel draw on inventory of finished products, gasoline and distillates. I see a lot of discussion about gold being overbought. When big secular bull markets get going, they can get overbought and stay overbought for longer than you can imagine. If history is any guide, GLD bull markets are unique in the extent that they can extend. Each of the last two bull structural markets saw gold get stretched above an upward sloping moving average, 70 to 150% above the 200-week before correcting and then going again. While we can't count on this, it is important to know that it can happen. Judging by how few investors own the ETFs and producers, there could be a lot of room to run. And that's gold. And I know a lot of people are talking about how overstretched the relative strength indicator and maybe the MACD is getting compared to history. But when people want to get out of crap assets and they want to go to something that's good, especially during a market condition that favors gold, then yeah, we can get way overstretched. It's the way it is. Rock Bottom Entry says precious metals miners are in the manic buying phase of the cycle. The most money is made here, and shortly afterwards, the most money lost. Enjoy the run, have an exit plan. Yeah, we could be in that area of making all that money. I'm already positioned in it, and I'm buying other stuff. That's kind of what I'm doing. I'm going to buy stuff that's down, and some of these, they're up a few 100% off their bottoms. So I'm just going to let them run. Hopefully, if we get a big run out of this thing, and then I'll swap them to something else in the future. QE Infinity says, so the rumors on Wall Street are the tariffs won't last long. Apparently, multiple small companies from various industries have filed lawsuits against the government, claiming they will go bankrupt if the tariffs stay on. Some think it goes straight to the Supreme Court pretty quickly. I don't know who's going to win this, guys. The Supreme Court, I'm skeptical of all of government and anything that government touches. Supreme Court's obviously probably going to side with government because they're the ones that selected some of these people, and some of them have alliances and stuff like that. But I don't know. I don't want them to go through. I think it's I don't want income tax and I don't want tariffs. Put it that way. I don't want either one. So I want them to remove everything they can, and then I want them to remove the Federal Reserve Bank to get rid of the interest that we have to pay when money is created on that bond. I want to redo the whole damn system. This system allows for unethical dealings going on. I think if we fix that, I think a lot of the unethical stuff just diminishes. It doesn't mean it goes to zero, but it diminishes. Freight futures AM update. We've got dry bulk, Capesize down 2%, Panamax up 1%, and tankers are both up. VLCC up 3%, Suezmax up 2%. Grady says, been posting this chart for the gold miners index, the Huey, now for 2.5 years. Has been saying all along, it will play out. And the longer you doubt that, the more you will miss the only boat. Posted the chart and linked post below at 280 at the blue back test. It then bottomed only 4 days later at 271.46. Then had a very strong move to 397.28 for a 42% move up for the index. This is the kind of quality you can, yeah. He thinks that it's a true generational opportunity continued with the gold 8-year cycle low back in 2022. And the miners bull will evolve in stages. The third stage for miners up from 2022 lows started 4 months ago at the blue backtest below. During the huge up move in gold last 15 months, most have been, as usual, preoccupied with listening to attention-seeking narratives about an impending stock market crash, constant talk about metals manipulation, and USD going to the moon. How did that work out? Instead of looking at price and understanding what is actually happening, and instead of securing proper guidance, it's imperative to really understand that for the markets to even work, most have to be wrong at the wrong end of sentiment views on things at major turns, breakouts, and levels. Always include all analysts, experts, and services. Think hard about what this really means for you and read and watch. I got it. So here's the Huey, the breakout, and we are moving on higher for the Huey. What he says is about 1,250% increase from that bottom. And is it time to revisit the upper trend line of the channel? And what he says is, I think it is. So we've got a huge opportunity here in gold miners, gold and silver miners. Silvers is lagging behind gold at the moment. Amena says, the view from China, the U.S. is not getting ripped off by anybody. The problem is the U.S. has been living beyond its means for decades. It consumes more than it produces. It has outsourced its manufacturing and borrowed money in order to have a higher standard of living than it's entitled to based off of its productivity. Rather than being cheated, the U.S. has been taking a free ride on the globalization train. So I do agree with that. I don't think the U.S. has been getting cheated. I think they've been doing the cheating. And that's going to come home to roost. I hate to say it. The dollar is going to get hit. That's what's going to happen. Here's another one from Grady. He says, posted this chart from the first time back in 22, saying it would play out, and that is a very important chart for the next macro trend. And for global capital flows. The chart broke down as expected, and in the post link below, I posted the first back test. The chart told us back then that the stock market was to decline hugely versus gold, and most probably drop with a big decline. And that we now have. Means the narrative followed after the chart told us what has to happen. Charts often tell us what will happen before the news narrative does for many reasons. Also, the chart also told us that the global capital was to start rotating into precious metals and commodities, and that the global capital rotation has been going on since then and is now accelerating by the day. Also, the chart has produced evidence after evidence since first posted. After the back tests from below, it had an expected lower low below the breakdown low, confirming that the breakdown was for real. And now it has a lower low below the 2020 low, yet again confirming the bear market for this ratio. Said at the back test that gold was set to outperform the stock market from there on. And that is what happened since then. This chart, together with many other charts, helped us at the service to get positioned heavily at the precious metals low back in early of 24. The 25-year triangle apex back test was a huge clue for what was to come. So that's coming all the way down, and we're seeing Dow Jones break down against gold, and it's looking pretty ugly. And it's starting to accelerate. We're seeing more money go into gold and more money flow away from the Dow Jones. It's a combination of money flowing out of one sector, moving into another. And this also signifies that we are entering and are in a commodity bull market. So that is what is good if you are positioned in commodities. Breakaway says, Bramer, the IEA and OPEC have revised down their global oil demand growth projections for 25 and 26. OPEC's updated forecast now anticipates an increase of 1.3 million barrels per day for both years, representing roughly 1% annual growth. The IEA revised its global oil demand forecast 300,000 barrels per day downwards to 730,000 barrels per day in 25 and 690 barrels per day in 2026. We got high heat here. Oil and silver on the cusp of breaking out. I agree with that. They both look very good. Here's a platinum alert. Over the last 3 days, platinum has been leaving the COMEX depositories in a material way. Platinum in the registered category has declined 13%. Total platinum in both registered and eligible categories has declined 17.65%. Looks like someone's getting their platinum supply on. Oh, yeah. And that's where we're going to end it, guys. So that's what we've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Use that special coupon code if you'd like. But that's all I've got for today. We've got a Sunday question and answer session coming up at 5 p.m. Mountain Time if you'd like to join that Zoom call. All right, guys. We'll catch you next time. This is Finding Value.